Hello, XRP community. Headlines are flying again. Large transfers linked to Ripple-managed wallets showed about 320 million XRP moved to exchanges over the last 7 days. This comes immediately after the monthly escrow cycle, where 1 billion XRP was unlocked, roughly 700 million was returned to escrow, and an estimated balance remained available for liquidity operations. The question everyone is asking is simple. Is Ripple selling, or is this standard liquidity provisioning as institutions reposition into October? Let's set the table with what we know and what we do not. An escrow unlock is a mechanical event. Tokens are released to a Ripple-controlled reserve, and historically a portion is relocked, while some amount can be deployed over time for market operations, partnerships, or liquidity support. Unlocked does not mean immediately dumped, and moved does not automatically mean sold. To assess impact, we have to look at exchange balances before and after the transfers, spot volumes during the transfer windows, and whether those balances later decline, often a sign of cold storage moves rather than persistent sell pressure. Price context next. XRP is trading near $2.99 with a modest intraday dip of roughly 0.7%. The broader market is mixed. BNB continues to print new all-time highs. Stellar remains stable around 40 cents. And Hedera is consolidating near 22 cents after a minor pullback. This is what an inflection week looks like. Resilience at the index level, pockets of momentum, and a tape that rewards preparation over prediction. Now, to the transfers themselves. A weekly total near 320 million XRP, close to $1 billion at current prices, has been flagged moving toward exchanges. There are several possible motives. Liquidity seeding for institutional customers, market-making inventory rotation, internal wallet rebalancing between operational accounts, direct distribution. Without matching order book and balance data, we cannot assign certainty to any single motive. What we can do is read the footprint. If exchange balances jump and stay elevated while price stalls under resistance and funding overheats, the market is absorbing net supply. If balances jump and then bleed out as price stabilizes and spot volume firms, the transfers were likely transient routing rather than heavy distribution. There is also a separate transfer cluster worth noting. Approximately 18 to 19 million XRP moved from one labeled address to another associated with Ripple. The sender carried an RL prefix, which commonly appears on Ripple-controlled wallets. That pattern often points to internal rebalancing rather than third-party sales. Internal moves are not inherently bullish or bearish. They simply keep the operational grid supplied where it is needed. If you want a concise, printable flow map, one-pager that lists XRP's key levels, invalidations, spot volume thresholds, exchange balance tells, and funding and open interest ranges to watch, type flow map in the comments. We will prioritize it for the next update. Let's widen the lens. The current market impulse has been led far more by institutional liquidity than retail enthusiasm. Retail interest indicators remain subdued even as headline prices have pushed higher in recent weeks. That is why rallies feel heavy on the way up and orderly on pullbacks. Large players are managing inventory with a view to quarter-end and policy calendars, not chasing every candle. If ETFs advance on a compressed timeline and policy risk cools, that liquidity can expand. If timelines slip, the same players can pause without abandoning the structural thesis. This brings us to the October-December rotation pattern. Historically, Bitcoin's strength sets the stage, and altcoins with real utility begin to outperform as funding normalizes and risk capital rotates down the curve. In that regime, XRP leadership depends on 3 confirmations. First, structure. Reclaim and hold key round numbers through full session closes. Then convert $3.15 from resistance into reliable support. Second, derivatives posture. Rising open interest with stable funding, not spiking funding under resistance. Third, exchange flows. Net outflows after red sessions and flat to declining balances during rallies. Both signs that supply is not suffocating momentum. Policy remains the joker. A late October rate decision can change discount rate assumptions and, by extension, appetite for duration and risk across assets. ETF workflow noise can compress or extend timelines. Government operations headlines can delay data releases that traders use to calibrate positioning. None of that negates the Payments Modernization Arc or ISO 20022 adoption. It simply alters the tempo at which liquidity steps in. Now, let's answer the headline question directly. Is Ripple selling XRP? The honest answer is that Ripple appears to be moving significant inventory through its operational wallets after the monthly escrow cycle, and a portion of that flow has reached exchanges. That is consistent with prior first-of-month behaviors. Whether those units are being sold, lent to market makers, or staged for corridor liquidity will only be visible in the secondary data: exchange balances, net flows, and how price behaves at resistance. The play is not to guess intent, it is to track outcomes. Here is a practical framework for the next 48 to 72 hours. 1. Define your levels before the U.S. cash equity open and do not chase the first wick. 2. Watch funding and open interest every 4 hours. A rebuild in open interest with calm funding is constructive. 3. Track exchange balances into and out of the daily close. Late-day net outflows after weak sessions often precede firmer opens. For mine counterparty risk, distribution days attract opportunistic behavior, and portfolio safety includes exchange safety. A final note on narrative. It is tempting to label every large transfer as a conspiracy or every unlock as a sell. The data rarely support the extremes. Markets move on liquidity, positioning, and catalysts. If October delivers policy clarity and ETF progress, alt rotation can accelerate even if Bitcoin cools. If the calendar muddles, expect another leg of consolidation while institutional flows reshuffle. In both cases, your edge is the same. Prepare levels, read flows, execute the plan. Tell us whether you view the 320M transfers as routine liquidity or a final trap before new highs. List the top 3 signals you want us to track daily: exchange balances, funding/open interest, or spot volume at resistance. If you want the printable flow map, comment flow map, and we will publish it in the next update.